This is the Asia Trade. I'm Annabelle Droulers in Sydney.
And I'm Paul Allen. The top stories this hour. Futures pointing to stock losses in Asia with growing scepticism about the AI trade fueling a mega cap sell-off on Wall Street. Oracle under pressure over data center financing plans.
Micron shares that are jumping after the bell. That's after the largest US maker of memory chips gives an upbeat sales forecast.
And President Trump set to tout his agenda to US voters in a national TV address, as polls suggest public unease with his economic approach.
All right. Well, I think we can talk about, of course, the US session overnight, because it was just more volatility kind of coming back into the equation again. And it just seems like any nervousness really comes down to data centers and how is that rollout going. So we had Oracle, of course. We've got Blue Owl that's pulling out of that deal. What does that mean? Of course, it's their Michigan project. There's a couple of different factors, and we can get into those in a minute. But just to say, overnight in the US session, more volatility in equities. We saw them pulling back. But actually, the dollar treasury's a little changed.
Yeah, we've just opened for trade here in Australia as well, already seeing a reflection of that risk-off sentiment. We're off by about 1/3 of 1%. A couple of stock-specific stories to watch today. Let's start with Woodside, the oil and gas producer. That's off 1.5%. We've just had news that CEO Meg O'Neill is resigning, and she's going to become the CEO of BP. Liz Westcott will be the acting CEO of Woodside in the interim. Those shares off about 1.75% at the moment. ANZ shares, one of the big four banks here, they are flat at the moment. It's going to be a big day. The AGM today, the Shareholders Association wants Paul O'Sullivan removed over growing discontent about past failures at the bank and a string of incidents as well. So that could be a fiery AGM for ANZ today. We're also looking ahead to the open of trade in Asia, though, and we saw a modest recovery for the Kospi, some of these tech-related names. We might just see all of that get unwound today.
Yeah, I think it's going to be really interesting because, as we said, overnight you had that pullback in names like Nvidia, for instance, but on the other hand, you had Micron coming out with their figures post-trade, and actually when you took a look at what they were projecting for the current quarter, it's strong. It's actually a lot more stronger than what analysts had been expecting going into the numbers. But let's bring in our senior executive editor for Global Tech, that's Tom Giles, for more on Micron's results. So, Tom, I mean, as I said, it's a good forecast.
Yeah, I mean, this was by several $1 billion. The forecast is far more bullish than, analysts had been predicting. The markets need a good sign for the AI world. You guys were talking about Oracle just a minute ago. Any hint of any sort of delay in this, anything that's going to slow down the AI boom, certainly send shivers across the markets. Micron, on the other hand, a very bullish note, forecast coming in above analyst predictions. The past quarter, also revenue and profit were both above analyst estimates. The fact of the matter here, and where Micron benefits, is in the area of high bandwidth memory. That's the memory that's used in artificial intelligence technology, and there's a shortage of it globally, and Micron is benefiting very handsomely from it. CEO got on a conference call and said that shortage is going to last well into 2026 and beyond. So what that means is that's going to keep demand pretty buoyant. That's going to give them pricing power for their competitors, and really, helping Micron stand out in this world of big demand for AI chips.
Tom, what about the valuation for Micron? We saw a pop after hours, but 11 times earnings. Does this represent pretty good value in the AI and tech space at the moment?
Valuations are definitely through the roof right now across the space. There is definitely concern about whether that is going to be sustainable, right? And it's not just a question of whether there's demand for the hardware. NVIDIA, the leader in AI chips, has said that the demand for its chips is there. Demand for data centers is absolutely there. The question starts to arise when you start to talk about how those are going to be financed, and then ultimately, will there be enough end use for the AI services that all these data centers are providing. Are there going to be enough people and companies and businesses willing to spend money on AI service, on generative AI, on chatbots, on creating videos and audio using AI tools? So building the capacity for AI is absolutely there. People want data centers, people want the chips, they want the memory. That's what benefits Micron. But in the end, what's really going to matter is whether the OpenAIs of the world that are spending so much on these data centers are going to be able to generate enough revenue from the end services to justify all of this investment in the infrastructure.
Tom, thanks so much for joining us. That's our Senior Executive Editor for Global Tech, Tom Giles there. And I think really that points to it. Yeah, you've got that strong number for Micron in late trade. You've seen that market reaction to it as well. But intraday, it was very much about the Oracle and the Blue Owl story as well, and just real concerns about their data center build out. Is it on track, and are all of the financiers coming to the table as well?
Yeah, Blue Owl, a long-term partner of Oracle, so this kind of thing is exactly what causes jitters and anxiety. Is like, why are they doing this? Where are they going? But it's worth pointing out that data center is progressing in Michigan. It's just going ahead without Blue Owl, and sources say, well, look, Blackstone could be stepping into the fray here.
Yeah, Blackstone's certainly an important partner in this, and to your point around it's Michigan specifically, and are there other factors at play? We were talking with sources about this, for instance. Maybe one of the things that's coming into the equation is just also the political climate in that state as well. But yeah, that's been, of course, a big story in the session, and you can see here really that drop you've seen in Oracle of late. That's Blue Owl as well. You can see there the line in blue, but Oracle very much under pressure, just given it's so closely linked to OpenAI and the concerns around maybe OpenAI also losing its top tier position as in the foundation models market as well.
Yeah, and as an aside, the cost of protecting Oracle's debt against default now the highest since 2009. Let's move on to politics, and President Trump set to address US viewers in a few hours as polls suggest voters are souring on his handling of the economy. Let's get to Bloomberg Balance of Power co-anchor Joe Matthew in Washington. So, Joe, the midterms are coming. When we hear from President Trump today, what can we anticipate? Some greatest hits or some new policy announcements and setting the scene for where the midterms are going to be fought on?
This is the question we're all asking. It was just a little more than 24 hours ago. We actually learned from the president on social media that he would be addressing the nation in prime time, which is not a forum that he uses very often, interrupting people in their living rooms while they're watching primetime television to speak about what? We are told it will be the economy and the issue of affordability, the big buzzword here in Washington, seeing recent polling showing that President Trump reached a new low in AP polling, 31% supporting the way that he's handling the economy. But of course, a presidential address to the nation in prime time typically comes with a major announcement. This is something a venue used for times of war, other big domestic policies that the president will be rolling out, trying to capture a different audience. So will we hear something, for instance, about Venezuela having announced a blockade last evening, or Syria having promised retribution following the killings of 2 troops there last weekend? Will we hear about the war in Ukraine? These are all fair questions to be asked. And I'll put a finer note on the issue of affordability, as today a number of Republicans jumped across the political aisle to sign on a Democratic petition to force a floor vote on Capitol Hill to extend Obamacare health subsidies once they expire at the end of the year. Will the president direct his party on that issue? That would be big news if it happens, and we'll be carrying it here on Bloomberg.
Is this something that this sort of movement we're seeing, or I guess that slight shift away from the Republican Party, is that something that the Democrats are actually capitalizing on at all?
They're certainly trying to rhetorically, but we have to remember still at this point, Republicans control the House, the Senate, and the White House. And there's not a lot that Democrats can do in the minority outside of what I just mentioned. They're using every tool they can. In this case, something called a discharge petition, with enough members of the House can force a floor vote, as they will do now some days from now, likely when they get back in the middle of January. It's really more of a messaging battle at the moment, and Democrats think they've got a good one. If they can blame Republicans for causing people's health care premiums to rise, they believe that's plenty enough to help them cruise to a victory in the House with history on their side in this midterm election.
All right, our Washington correspondent there, Joe Matthew. Thanks for joining us. Also co-anchor of Bloomberg Balance of Power. Let us check in on how Woodside is tracking because, of course, we had the news today that CEO Meg O'Neill is leaving. She's resigned. She's on her way to take up a new role as CEO at BP. And we're seeing Woodside shares now off about 2% in the wake of that news. We're going to discuss this story a little bit more later this hour with Daniel Hynes, the ANZ senior commodity strategist. Coincidentally, ANZ is another stock we're watching as well. Shares there flat at the moment ahead of the bank's AGM, which is today. Could be a lively one. There's a lot of discontent at ANZ over a number of regulatory failings that have led to fines, additional capital requirements as well. The Australian Shareholders Association wants Chairman Paul O'Sullivan removed, and the executive pay report also at risk of being voted down.
Yeah, lots of questions about the remuneration, and really has enough been done to take account for past failings at the lender as well. But coming up on the Asia trade, we're actually going to be hearing from ANZ, but on a different topic, of course, discussing how tensions between the US and Venezuela are impacting the outlook for oil. Plus, UBS Wealth Management explains why they think investors should be putting excess cash into stocks and gold. We'll have that and much more ahead. This is Bloomberg.
Let's take a look at how US futures are performing at the moment. It was not a great session for the S&P, off by more than 1%. We've got futures pointing down at the moment by about 1/10% as well. Dollar yen, little change, a little bit weaker, in fact, 155.64. And we've got the yield bond futures as well looking flat at the moment. We heard from Chris Waller of the Fed also saying, look, he's not opposed to future cuts. Well, he certainly gave that distinct hint, although also saying or making it pretty clear that the Fed is in no hurry to continue easing into 2026. We heard from Raphael Bostic the day before talking about inflation still being of key importance for the Fed. Take a look at Nikkei futures as well, better by 1/3%. Although we may expect to see a little bit of selling in the tech space today, Bell, after what we saw in the US.
Yeah, well, it was the big story overnight. Essentially, Blue Owl backing out of financing, or being one of the financing partners for a Michigan data center project for Oracle. And of course, that was a real jitter for the market because they've been long-term partners when it comes to project financing. So what does it actually mean? And investors certainly seem nervous about any signs that there's hints of trouble around data centers. What does that mean for the broader AI theme? And let's get more on that now. Bring in Sylvia Jablonski, CEO and CIO at Defiance ETFs. And Sylvia, how do you read that sort of news report, and how do you also sort of separate reality from perhaps also just knee-jerk reactions?
Yeah, great question, Annabelle. When I first heard the news, I thought to myself, well, the market tends to sell first and ask questions later, right? So we don't really know what the heart of the matter is here, too. I think what's clear here and what's important for investors to delineate is that they lost a financing partner. They didn't necessarily lose an AI data center project. They didn't lose the momentum that they have in terms of building out their AI infrastructure, their cloud infrastructure, their data center infrastructure. So I think, if we start hearing that they're pausing on their build out and their expansion plans, I think that is something that is more, perhaps tangible than for now losing this partner. And, the reality of the situation is perhaps they have to find another partner to finance all of their goals, but we have to also wait and see if the reason that they have these goals in the first place is because there is just so much AI demand and need for AI infrastructure that they have to build out these data centers. But again, it's really hard to tell because when the market hears news like this, investors tend to panic and sell. And then usually what happens a couple of days after is investors start to reassess, well, do we still think the AI trade is intact? Is Oracle, a leader in this space? And, perhaps do we now have a buying on the dip opportunity? So we'll have to see how that plays out.
Yeah, it's difficult to know because there's a delay to all of this as well. Maybe 12, 18 months, we'll get a real sense of the rollout and also that market demand as well. But what are the specific factors or signals that you're going to be watching going into the AI trade next year? What's going to be sort of the key metrics you'll be watching for?
Well, I think AI has shifted from a theme and, a good idea to actual, practical commercialization. And so what I'm going to be looking for is the expansion of that, right? I want to start hearing on the earnings calls across all sectors, whether, outside of tech, whether it's also healthcare, retail, aerospace and defense names, who is employing and using the technology within their business, and how is that playing out? And so while CapEx is increasing and investors are hear news like Oracle and they kind of tend to pull back, if you look back at corporate earnings, the news in terms of how these companies are actually performing has been very positive. It's been a strong earnings season, and a lot of it is actually due to AI and some of this technology coming into play. So I just want to see that continue and make sure that CapEx is playing out in the earnings.
You also talk about the need for a valuation adjustment when it comes to AI stocks rather than a systematic collapse. But is that potato?
Well, I think today is an example of that, right? You're going to have a lot of these companies in the AI space, whether they're NVIDIA or they're Oracle, and they're on investors' lists, and they don't buy them because the prices have run up so much. So I do think that pullbacks are going to be opportunities for investors to reset. However, on the other hand, for investors that are very, very, very concentrated in the Mag 7, who are very concentrated in tech and, kind of the top percentage of the S&P 500, you could also look to diversify your exposure by looking at something like an XMAG, which excludes those names, right? So I think I remain bullish, and I think long-term holding for some of these names that have run up is what a lot of investors do. But for those who want to diversify, you can look to things like XMAG and broaden out your S&P 500 exposure by kind of not picking up those next 7 names unless you get them on pullbacks.
A number of the conversations we've been having recently have focused on the opportunities in China's AI space. Are there any specific names that you're looking at there, or is there a promising ETF that you could buy to get exposure to that?
Yeah, I think in the game of, or in the world of AI and quantum computing, drones, artificial intelligence as it applies to different sectors, I think ETFs are really the way to go there. And I think that there are a whole lot of them to choose from, right? I mean, we have a quantum ETF that has global positions and gives you exposure to some of those names. There are also AI and infrastructure, AI power ETFs, things like this. And so I think it's hard to pick winners in this space, right? And the Mag 7 is involved. You probably already hold those, but there are 60, 70 other names participating in this theme and the global transition of AI into commercialization. And so I think ETFs give you a really great way to grasp that exposure.
There's been so much concentration, of course, in the Mag 7, to your point. Do you see that broadening out at all next year? What are your expectations around corporate earnings growth and also the broader U.S. economy and how that feeds in as well to the outlook?
Yeah, I think, if we kind of look at what we've seen this year, that there has been periods of high volatility. Today's been one of those days, right? We saw global markets selling off and markets in Asia opening that way. But I think, what we will see and what we have seen is we've seen strong corporate earnings, right? We've actually seen the Fed forecast positive GDP growth. We're on track for some rate cuts in the U.S. And that soft landing seems to be, playing out the way that the Fed and the market has kind of hoped it would. And so markets always pull back, right? It's a normal part of a healthy market, and breadth tends to increase when markets pull back. So I do think that, we are well poised given, barring any kind of major outside geopolitical issue, tariff issue, things like this, we are poised for a pretty healthy economy and a pretty healthy market going into next year. But investors should diversify, and they should look to, perhaps reduce the exposure to Mag 7 if they're highly concentrated there, and try to pick up, some new trades and look at some new themes in the market out there in the world of things like aerospace and defense, and maybe the AI infrastructure, AI power play, and that second derivative of that trade as well.
So how are you preparing then for that sort of environment? I mean, you just mentioned a couple of those themes there, but maybe just get into some more details on that.
Yeah, so I think again, having a broad-based exposure to the S&P 500, you could do that again through an equal weight or a Mag 7, and then I think, pick the themes that you think are going to play out in the next 5 to 10 years, and those could be longer term holds, right? The buy on the dip, the dollar cost averaging, whether it's quantum computing, whether it's AI power, whether it's AI infrastructure, cloud data centers, things like this. I think that investors are often looking for exposure to those things, but also, kind of broadening out what they already have if they think that a lot of the tech and semiconductor names have run up.
All right, Sylvia Jablonski, CEO and CIO at Defiance ETFs. Thanks, as always, for joining us. We have more ahead on the Asia trade. This is Bloomberg. Warner Brothers Discovery is advising its shareholders to reject a hostile takeover bid by Paramount in favour of its original agreement with the streaming giant Netflix. Now, the board says the Paramount offer is inferior and riddled with risks. Let's bring in Chris Palmieri, who leads our media and entertainment coverage out of Los Angeles. So, Chris, is this the end of the road for Paramount? Is there another chapter here?
I don't think it's the end of the road. I think Paramount was definitely hoping that Warner Brothers would maybe open the door a little bit to another offer. Instead, what Warner Brothers board said today was, as you mentioned, pretty tough. They basically said they've been misled by the Ellison family that controls Paramount. They don't believe the money's really there. And they said that all the cuts that Paramount's proposing at jobs and that would really hurt the entertainment industry in Hollywood. And so those are pretty strong words.
So how does this then progress? Because we had also the chairman of Warner Brothers appearing on CNBC, but talking about the timeline and when they might have as well a shareholder vote, either spring, early summer. It seems like there's still a couple of months. So what happens in these few months now?
Well, Paramount still has its tender offer for Warner Brothers shares open until January 8th, and it's going to assess, what support it's got for its $30 a share bid. Paramount could and has suggested it may raise its offer. It could extend the tender offer even beyond January. So a lot could happen between now and springtime when Warner Brothers shareholders are going to be asked to vote.
Chris, is there possibly another player emerging here? Should I mention the name Comcast?
Well, they definitely made a bid, and there were details about their offer in the filing, but they've made it clear at this point they're no longer interested. They didn't have the resources that Netflix or Paramount did in terms of a cash offer, and so they're not just being considered a strong player at this point.
We've had some reporting at Bloomberg Intelligence looking at what Paramount would need to do in order to get back into the race. I mean, they're saying that at least the offer needs to come in at $32.50 a share. What's your reaction to that? And as well, what's the likelihood, given that you're still saying that we might see a renewed bid from them?
I say a new bid is likely. They've certainly suggested that, but the indication from the Warner Brothers board is not great in terms of their receptiveness to negotiating with the Paramount folks. And it's worth noting that Netflix has a right to match any competing offer. So even if Paramount were to, say, come to $32.50 and Warner Brothers would say, okay, then Netflix could raise its offer.
Chris, thanks so much for joining us. That's Chris Palmieri there, who leads our media and entertainment coverage in Los Angeles. We'll have much more ahead on the Asia trade. This is Bloomberg.
Right, let's take a quick look at how oil prices are tracking. We're seeing a modest bump for WTI, back up to just below $57 a barrel now. This is on rising geopolitical tension. There could be further action against Russia's shadow fleet, but also Venezuela pretty much encircled by a US armada at the moment. However, got to be said, Venezuela only offers about 1% of total global oil supply. So let's see how long-lived or short-lived that bump for crude prices is. Now, a couple of stock-specific names to watch out for there at the top right. Woodside shares pairing earlier losses now off about 1.1%. We are, of course, watching this because Meg O'Neill, the CEO of Woodside, announced that she is resigning today and she is on her way to take over the role of CEO at BP. Let's get a little bit more on this story. Australian energy reporter Kira Wright joins us now. Kira, how much of a surprise was this announcement from Woodside and Meg O'Neill today, and what happens next for Woodside?
Paul, I think that it honestly caught everyone by surprise. It certainly isn't something that was on the radar of any of the analysts or people that have been watching Woodside closely that I've spoken to this morning. I think that what the next steps will be here is whether or not this redirects, I guess, Woodside's next move. So Meg O'Neill has been really well known for her bullishness on gas and LNG specifically. So it'll be interesting to see whether that direction changes now with new leadership.
Yeah, exactly. Because can you just give us sort of a bit of a breakdown on exactly what's been happening at Woodside, and I guess some of the tasks that are left unfinished as she departs this position?
It's been quite a big year for Woodside, to be completely honest. So earlier this year, we saw the approval of Woodside's Northwest Shelf, which is a big LNG facility up in the top of Australia. That one's been approved to continue exporting LNG until 2070. It was quite controversial at the time. And it's, I guess, one that the new leadership's going to have to continue to grapple with for decades to come.
Okay, so Kira, Meg O'Neill on her way to BP. I mean, we're seeing quite a lot of change there as well. Are we detecting the fingerprints of Elliott management at the top at BP?
I mean, it's really hard to say at this point, Paul. What I can say about BP, though, is that they've had quite a difficult run lately. So we've seen a lot of, I guess, bad luck. They've made a couple of bad bets on some renewable technology that haven't panned out as they've hoped. I mean, in some ways, you can even read this as, I guess, them doubling down on their fossil fuel efforts. As I mentioned earlier, Meg is really known for being, I guess, quite bullish on fossil fuels, in particular gas and LNG. So we might see some of that translate over to BP now.
All right, Australian energy reporter Kira Wright there. Let's get a bit more perspective on commodity markets. Daniel Hynes, senior commodity strategist at ANZ, joins us right here. Daniel, I know you don't cover the equity side, but we can talk more broadly about oil markets. And I just want to start with this blockade of Venezuela by, well, a large number of US military vessels now. Trump has also described the Maduro regime as a terror organization. Look, given Venezuela only accounts for 1% of global supply, as I mentioned a minute ago, how enduring is this bump to oil prices going to be?
Yeah, look, it could be fleeting. I mean, the issue is complicated. I mean, there is talk of only impacting sort of sanctioned vessels, and from our calculations, that only makes up about 20% of Venezuela's exports. So, in a sense, you could only be looking at 200,000 to 300,000 barrels a day of oil being impacted. That is, a relatively small amount considering the wave of supply that we're expecting to see now over the course of the next 12 months. And these things do tend to blow over relatively quickly in terms of market disruptions. So, I think the market's probably just taking it in the right way. It's clearly could be an impact in the very short term, and physical markets might feel a little bit of tightness as a result of that. But I think futures markets and the broader sentiment, won't be really impacted unless, this develops into something more serious and we see, potentially its entire oil industry sort of come under pressure.
Also sticking with geopolitical tension, the pressure continues to be piled up against Russia's shadow fleet. But in terms of the Russia-Ukraine conflict, is the greater potential catalyst that we see some sort of a ceasefire deal, and that would put more downward pressure on oil?
Yeah, I mean, I think the price has been holding up in part because the market's come around to, I suppose, the prospect of that deal being reached. Although, for me, the evidence still isn't there. I haven't really seen Russia move too much on its side of demand, so that peace deal still looks a little bit way off for me, but I think the market is certainly taking a little bit more into consideration, I suppose. And that could certainly open up, I suppose, the prospect of Russian oil flowing more freely through the international market. I mean, it's been able to sell its oil to new buyers like China and India in recent years, but certainly the removal of any sanctions which a peace deal would involve, I think would certainly see the taps open up more freely, and clearly, that would be a negative on the market.
Yeah, I think to your point, though, there's huge sticking points in that peace deal, specifically around territory, and maybe the market is getting ahead of itself. So what are the other scenarios that you're looking at instead? Yeah,
well, I think for me, probably the higher probability is that we actually see the US double down on the pressure on Russia. If they don't come to the party, then we start to see, additional sanctions being placed, and that's already been muted in the press over the last day or two. I think the realisation that Putin refuses to move, he feels like he's in a powerful position and doesn't have to give up, what he's already gained, then I think the likelihood of additional pressure by the US in particular, could certainly result in, a significant tightening, I think. And we've already seen evidence of that, Indian refiners, pulling back from the market. There's a subsequent build-up of tankers on the Chinese coast at the moment. So, I think that, for me, is the more likely scenario to play out here.
I think beyond the geopolitical headlines, though, the sort of broader dynamic of the market, and something we've been talking about really all year, is just that supply glide and when exactly it was going to be forming and when it would hit. What do you expect around that for next year now, I guess?
Yeah, well, I think it's the most publicised, well-known sort of surplus in the market we've ever seen. And I get a sense, actually, that it's subsequently well priced in.
Right, okay.
So, depending on where we actually reach that point, I think, to be honest, right now we're probably in relatively well-balanced. Inventories are starting to build in little pockets here and there, but not hugely. So, that influx will come, I think, in the first quarter. But I don't think on those supply-demand fundamentals that we'll see a significant shift in pricing. I think it's already pretty much factored in. And so, that will leave, I think, those geopolitical supply risks
coming to the fore then.
Coming to the fore,
yeah, okay.
Look, we have a chart on the Bloomberg terminal that sort of illustrates all of this, and WTI yesterday back at 2021 levels as well. Do you see a potential technical breakdown in the price here, and what's OPEC Plus going to do at its next couple of meetings?
Yeah, well, technically it does look a bit vulnerable, and certainly these things tend to overshoot in the shorter term, so I wouldn't be surprised if we did see that. Certainly if there are any sort of headlines around Russia becoming a bit more amenable to that peace deal. But I think that's where OPEC comes to the fore. They're certainly sitting back on the sidelines waiting to see how things play out. I mean, Russia is obviously a part of the OPEC Plus alliance, so that adds just a little bit of complexity around what happens. But I think for them, they want to see this thing play out before they really make a move. And that probably places a bit of a cap on the price. If we did see, the US increase pressure on Russia, then I think OPEC would come in quickly to just temper any sort of rally in prices that we may see as a result of that.
And in this environment of persistent weak prices, how are things looking for US shale drillers?
Yeah, well, pretty tough. I think for them, they want to see, a consistent sort of improvement in price, and at the moment, we haven't really seen that. They're marginal at best for some of the regions. I think they'll still continue to focus on drilling efficiency and productivity and the like, so we may get a little bit of gains there. But for me, there's nothing that really suggests to them that they're going to open the taps again. I think for them, they're going to remain relatively cautious. So, yeah, that end of really strong growth out of the US, I think, is over from our perspective.
What about copper as well? Because that's also been led by the US specifically around any front-loading signals for tariff risks, and also now you've got the Fed playing into it as well. But some conjecture, I guess, over prices and then whether we stay elevated and for how long. Yeah,
I mean, it obviously was triggered by the supply issues we saw earlier in the year. But for me, it's the sustainability of that rally that subsequently emerged. Normally, these things last 1-2 months at best, but now we've seen a strong 9-month sort of rally emanate from those initial supply issues, and that talks to, I think, the underlying strength of the market. Clearly, there's potential some risk that prices may be pricing in that real boom in demand over the next 3 years right now. But I don't see any real downside risks at the moment for copper. We may get a period of consolidation, but for me, the outlook still looks pretty positive. What's the upside scenario then that you see? Well, the upside is if we continue to get supply constraints emerge. This year was a little bit higher than normal, but it's getting increasingly difficult for operators to continue at these types of levels, and we see it in Chile, we see it in Africa. So, these ongoing sort of supply disruptions, I think, are going to become more and more common, which will clearly put a dent in the industry's response to that huge growth outlook that we're seeing. On the topic of outlook, do you have one for gold? It's had an unbelievable year this year. Can that continue? I think so, yeah. I mean, look, we're expecting a bit of a period of consolidation. It obviously has had a really good run. But for me, it hasn't been one single driver which has pushed it to this point. And that, I think, provides, some optimistic sort of outlooks for it. It's a multi-pronged which doesn't rely on one particular sort of issue. And once we see, I suppose, that FOMO trade just die out a little bit more, people start to reconsolidate and buy back in, I think we'll see further gains. I mean, our forecast for next year is 4,800 for gold. After that, it will really depend, I suppose, on how the Fed changes or shifts its monetary policy. And I'm wondering if you can unpack the dynamics around silver for us as well, because that's had a stellar run also, and that gold-silver ratio is still pretty wide. But is that a harder one to predict? Because it's got this long history of being speculative, people shorting it. What's happening in the silver market? Yeah, I mean, it's a much smaller market than gold, so you can tend to get that activity in there. There's clearly was a bit of catch-up trade as a result of the rally in gold. But I think it's other factors. It's industrial demand use. It is just been classed as a critical mineral by the USGS. So its desire by the Americans as a critical mineral is only just elevated as a result of that. And then the threat of potentially attracting tariffs as a result of that, I think, has just magnified the gains. I don't think any of those issues will die down quickly, so that just will keep sort of that pressure on supplies, I suppose, relatively high. So I don't see it dying off, but look, it has been very strong of late. Once again, I think maybe a period where things just settle down. Dan, great to have you with us this morning. That was Dan Hynes, their Senior Commodities Strategist at ANZ, and we'll have much more ahead on the Asia trade. This is Bloomberg.
Let's get the latest now from the corporate front. US prosecutors have charged the founder of bankrupt subprime auto lender Tricolor with conspiring to defraud lenders and investors. The indictment accuses executives of using various schemes, including double pledging auto loan collateral and manipulating loan descriptions. Tricolor filed for bankruptcy in September after shutting down more than 60 locations across the US Southwest. E-commerce firm PDD is said to have fired a government relations team in Shanghai after staff brawled with Chinese regulators during company checks earlier this month. Sources say the fight happened during investigations into reports of fraudulent deliveries on the platform. The incident could lead to more scrutiny of PDD from state regulators. Tencent has appointed Issel as its chief AI scientist, entrusting the former OpenAI researcher with leading its artificial intelligence efforts. Yuan will report directly to President Martin Lau and also head the company's AI infrastructure department. Tencent's move is the latest in a series of high-profile hires in the sector this year, most notably led by Meta.
Well, staying in China, because Bloomberg's learned that China Vanke has asked some commercial banks to accept delayed interest payments as it grapples with mounting liquidity pressure. Let's bring in our China correspondent, Min Lo in Hong Kong. And Min, it just seems like we're getting ever closer to what could end up being one of the country's biggest ever restructurings. But what do we know about these expanded debt talks?
Yes, this is based on what sources are telling us, and Vanke had held a meeting yesterday with representatives from banks and insurers yesterday, asking for extension on interest payments, also asking some of them to give it more time for a new debt plan. And separately, it also said in a filing that it has secured an extension by 1 year of a guaranteed loan that is provided by one of the banks. And this is coming, after Vanke had failed to secure bondholders' approval to extend a bond payment that was due earlier this week on Monday, which was not surprising because it was a very bad proposal with no upfront payment or installment. So we are watching another bondholder meeting taking place today at 10 a.m., so about 3 hours from now, where Vanke will be giving new proposals with more credit enhancements. It's still asking to delay the principal payment, but it's offering to pay the interest by next Monday, but with an extended grace period of 30 days instead of 5 trading days. So we'll see what happens later.
Yeah, we will see what happens. And if this doesn't work out, what's in store for bondholders? Are they running out of options?
Yeah, so right now their option is either to agree to an extension to buy more time for Vanke to pay them back, or they can call a default on the bond payments if Vanke doesn't pay by the end of the grace period, which is next Monday. And given the liquidity conditions of the company and given the signals from the state-owned company Shenzhen Metro, which is the biggest shareholder, the signals there seems to be that they are tightening borrowing conditions as well. So some analysts are saying that it is probably going to be quite inevitable that at some point Vanke will have to go through a holistic debt restructuring. And some analysts are saying that it might be better for bondholders to call default immediately. It might speed up the recovery process instead of dragging this on for a long time and constantly extending the grace period.
Yeah, so I guess given you've got those two scenarios, a faster restructuring, one that's more protracted, how does that also play into the contagion risk that we're still trying to assess?
Yeah, there will be some contagion risk just because this is a company that is a state-backed developer, which for a long time has been seen as pretty protected from this property crisis. So I think it will be hit to confidence, to home buyers' confidence when it comes to whether or not they will be willing to buy homes from state-owned developers. At the same time, banks will be more cautious about lending, right, tightening the borrowing conditions, which will just worsen the liquidity crunch in the broader sector as well. So it doesn't look like we're seeing the light at the end of the tunnel for the property sector, especially given that the central government also is not indicating that they are willing to revive the sector as a key driver of growth for China's economy.
All right, Bloomberg's China correspondent Min Lo there. We have more ahead on the Asia trade. This is Bloomberg. The top global headlines that we're following. Chinese visitor growth to Japan slowed in November by the most in almost 4 years. This is, of course, amid a political dispute over Prime Minister Takaichi's comments about Taiwan. Arrivals from China rose just 3% from a year earlier last month. And that is the slowest increase since January 2022. Beijing has discouraged travel to Japan and ordered airlines to cut flights through to next March. Malaysian Prime Minister Anwar Ibrahim says both Thailand and Cambodia are keen to end their border clashes as soon as possible. He says foreign ministers from Southeast Asia are set to meet next week and will aim to convince both sides that peace is imperative. Thai and Cambodian forces resumed their clashes earlier this month after a short-lived ceasefire. And Australian authorities have charged the surviving gunman in the Bondi Beach shooting with 59 offences, including murder and terrorism. At least 15 people were killed during the attack. 24-year-old Naveed Akram remains under police guard in hospital. The other shooter, his father, was killed by police. Officials say the attack on a Jewish gathering was inspired by the Islamic State terror group. Bell.
We're taking a look at some of the stocks we're going to be watching when trade opens in Japan and Korea in just a few moments from now. So the big story is going to be tech, and I think the way that investors digest two very different stories or very different sentiment drivers in the session, because intraday it was very much that focus around Oracle and Blue Owl. And the key headline here is that there's been a decoupling taking place because Oracle's stock fell. That was after it confirmed Blue Owl Capital isn't going to be contributing equity to a data center project in Michigan. So this project is still moving ahead, and it's important to note that because Blackstone, for instance, is going to be one of the parties to that project financing. But we have seen lots of nervousness from investors if data center projects have any sort of hiccups in terms of the rollout or development. It certainly does put nerves into the market. Micron, though, has been a very different story in late trade. So again, it's that question, which theme do investors pay more attention to? But Micron, the story here is that we had those earnings today, and what we saw essentially is a very upbeat forecast for the current quarter. They're looking at strong demand. They're looking at supply shortages as well. So the company has a lot of pricing power when it comes down to its products. But fiscal second quarter revenues, that's the current period now, they're expecting to come in at up to $19.1 billion. And you think about where we were, Paul, and it's quite exceptional. I mean, it's multi-billion dollars ahead of what analysts have been expecting. So again, it's that question. Are we going to be paying attention to Oracle? Are we going to be paying attention to Micron? Which theme is going to be more dominant in the session today? Yeah, we're going to find out. The market open not that far away now. We are underway, of course, here in Australia. One of the stocks we are watching is Woodside, the oil and gas producer. It has been fluctuating today. It was off more than 2% at one point. We're off by 1.8% now. Now, this is after CEO Meg O'Neill resigned. Now, no one saw this coming. Liz Westcott will be acting CEO once she has departed, but Meg O'Neill is on her way to BP, where she will be the CEO there, and she'll replace Murray Auchincloss, who's stepping down after less than 2 years at the helm. Now, BP, of course, has had some well-publicised problems, and one can't help but think that perhaps activist investor Elliott Management might have something to do with the movement. Let's take a look ahead to the market open in Japan coming up in just a moment. As Bell mentioned, there's some competing forces here. We do see S&P futures a little bit higher after those really good Micron results after the bell, but of course concerns about Oracle, Blue Owl, that's weighing on the tech sector more broadly. Nikkei futures are off by 1.7%. Do stay with us. Market opens in Seoul and Tokyo up next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. And as we head into the session today, we've just had a bit of a bout of volatility on Wall Street overnight. We saw the S&P 500 as well breaching a key technical level, and lots of concerns in the session as well around AI optimism, or that trade very much front and center. So we can get more details on that in just a moment. But as we said, the focus very much equities volatility. Actually, dollars, we saw that dollar fairly flat. Yield on the 10-year treasuries as well, little changed at 4.15%. But again, that concern around the AI trade and two key themes we were watching. So firstly, you had the story around Oracle and Blue Owl, the project financing for a Michigan data center project, very much playing into Oracle intraday, but also the likes of Nvidia, for instance, taking a tumble. But here you have the market open. Let's see how the Nikkei 225 comes online, and you can see already a little bit of pressure. Actually, equities have been looking for a drop of around 1.7%. It's the big countdown to the BOJ decision session, of course, on Friday, and the stage very much seems set for a hike. We do have the Japanese yen actually trading back above that 155 mark. It has been really hovering around this, though, for quite a period. So, yes, tech, that is going to be the key question for us, but also locally as well. You've got other stories, for instance, the continuing spat around China, Japan, Taiwan, and you are continuing to see tourist arrivals, for instance, to Japan slowing, and we have seen that having a really big bearing on the consumer sector in particular. Names like Shiseido, for instance, dropping quite substantially. But as I said, tech is the story. Let's also take a look at how that's playing into the Kospi in the session today, because the question really was for tech stocks. You had Blue Owl pulling out of the Michigan data center project with Oracle. It is still going ahead, but certainly caused some nervousness. Late trade, though, the story has very much been focused on Micron, because we got a very bullish forecast from that company for the current quarter. It seems like they've got a lot of benefits they're taking around the AI trade, but also a lot of pricing power as well. So they're expecting revenue of up to $19.1 billion for the period. That is multi-billion dollars ahead of the Wall Street consensus. But it does seem, again, investors much more focused on the Oracle story, because you've seen the Kospi there down 1.6%, even though you see Micron trading at 7% or around 7% higher in after hours. Let's also take a look at what's happening in the US space, because, as I said, we didn't see too much movement in treasuries overnight, but overall we did see treasuries just paring their decline slightly, and that was after we had some commentary out from the Fed Governor Chris Waller, and what he's saying is that he's pretty dovish around the outlook for US interest rates, and saying that the labour market is quite soft, and we saw that, of course, those jitters or sluggishness essentially in the jobs figures earlier this week, and also that rates, he believes, are still around a percentage point around where they should be at the neutral rate. So that did, of course, play into the dynamics. You're seeing S&P 500 futures here again fairly steady. We are really capping off what has been a pretty big year of trading. But let's bring in Hartmut Issel now. He's head of APAC Equities and Credit at UBS Wealth Management. So I mean, it just seems like we wrap up this year, we go into next year, tech is still the key theme.
Well, I would say it's one of the key themes, especially also AI. Right? And of course, we're also following all these discussions, right? But what we're seeing, if we look at data, I mean data in a sense of where are the corporates, especially in the US also right now, right? We see the penetration rates. I mean, any set of data, right, is certainly below 50%. The most recent one I've seen was 17% or so, right? And we cannot only think about tech because, of course, they're creating these structures, but we need to ultimately see all the different sectors, right, from healthcare to, I don't know, travel agencies, everybody, right, flocking into the AI side. And that is still very, very early. So, yeah, I think taking a step back, that looks also interesting for next year. At the same time, I would also say, you know, as an equity investor, I wouldn't completely rule out, you know, other sectors also doing well. I mean, banks, we had just a couple of weeks ago, global banks put out the theme. That's going very, very well, right? If you want to do something where the focus was not so much on, like healthcare, for example, right? That could also come back in 26. So probably mixing things a bit. That's probably a good strategy for equity investors right now.
No, you're right, Hartmut. I mean, we have seen that rotation, I guess, away more into value, away from big tech and more into the financials, for example. So do you see that also being sustained into next year, and which sectors would you be looking at in particular?
Yeah, no, I would actually. And coming back to the banks, right, that's quite interesting. I mean, we have a global theme, so that means here in APAC, right, in several countries, like in India, like in Indonesia, where we think the loan growth rates are coming up again, looking much better next year, right? So we want to price that in. But also for the US, right? And I think this is something that many investors don't focus so much on, is the deregulation, right? If you think about deregulation of the Trump administration, right? So which sectors would there be the most imminent one? We think is really on the banking side. So, you know, and between the Fed, I mean, the Fed has put some steps out already, you know, taking the risk levels down, etc. It already freed up a little bit of capital, but this will actually intensify in the first half, these discussions in the first half of next year, and it's not fully priced in. So this is certainly one thing that I think investors should watch for the first half next year.
So how are you looking at then building a portfolio? What's your allocation in terms of geographies or also asset classes as well?
Yeah. It's on the risk-on side, I should say. Yeah, so on the equity side, we have pretty much on a global scale an attractive, but it doesn't mean we should, of course, completely rule out or neglect other sectors on the bond side where we have overall a neutral. But it's pretty clear to us, right? And we just heard also on the program what the Fed thinks, or maybe also future governors think on the Fed side, right? What the bond yield side also tells us, right? You also need to be in these more safer, right? So from government bonds to all the way to maybe investment grade, etc. Also be positioned on that, and then you can, live with a couple of weeks that maybe like this one, right? They throw us a bit around, but then the entire portfolio is actually quite stable.
Just to pick up on your views around tech, I mean, if you're shifting away at least from maybe the big tech in the US, how do you also view it in China in particular, and do you look at sectors beyond tech in China as well?
Yeah, no, I mean, we certainly keep, right? We like also the AI plays, right? Just wanted to suggest, right, it's probably one of several ideas that we have. It's not the only one for the year. When we come to China and on the tech side in particular, right, it looks very, very interesting. I mean, if we look a little bit more in the details, right? So you have especially also the private cloud operators, right? In the last 2 quarters, how much we're seeing an acceleration of cloud growth, right, that we hadn't seen before for quite some time. So something's shifting there. And as a matter of fact, many of them, they offer you growth rates on the cloud side that actually are typical more of a hyperscaler in the US. So that's interesting. But of course, the valuations are maybe half there, or there's a big discount. So yeah, adding them also in a portfolio, especially also when we talk about AI, is also a very good move.
What else are you looking at for next year? Because I think some investors, for instance, are quite focused on the India market and looking at that in particular as maybe a diversification one as well.
Yes, India is a market that, I mean, has also gone up this year, but some other markets, not every market, but some other markets certainly have done even better. So I would look at India from a point of pure earnings, right? So basically what we had, and this is probably a positive sort of base, right? So their fiscal year, as we know, ends in March, right? And we had an unusually low earnings growth. I mean, we have a 6.5%, right? That happened in the year that closed before us. Now we see this year, and then especially the next fiscal year, so that's the fiscal year 27, or call it the next calendar year, actually even improving further, accelerating further. And yes, in this case, right, and it's not so much about AI, etc. I mean, India doesn't, in its structure in the stock market, doesn't have these kind of companies, right? So you get a different driver, but also for upside. So yeah, I think India is one of the interesting markets also for the next year.
What about gold as well? Because we just were speaking with Dan Hynes from ANZ, and his upside forecast is looking around 4,800 for next year. What's your strategy or your thinking around that as well?
Yeah. We are seeing a bit of upside, more upside, so we're calling it a 4,500, so there is a bit more to go, and especially also when we look at our forecast also on the Fed, etc. Right, so it is of course competing with anything that gives you yield or gives you interest, right? When gold itself doesn't have so if your competitors on the gold side come a bit down further, then of course that's also a positive influence that we see on gold. So yes, we see more upside towards the 4,500 level.
Hartmut, thanks very much for joining us this morning. That's Hartmut Issel there, Head of APAC Equities and Credit at UBS Wealth Management. And let's shift and take a look at what's happening in the tech space this morning, because we're just under 10 minutes into trading so far for Seoul and Tokyo. And you're seeing some quite mixed moves here. SoftBank is under pressure, and you can see quite a big drop, but that's not too surprising, just given we had the big news around Oracle and Blue Owl overnight. So we saw Oracle dropping intraday in the session, and that was after it confirmed that Blue Owl, it's one of its financing partners, is pulling out of a Michigan data center project. SoftBank, of course, has been very exposed to the Oracle story and to Project Stargate as well as a financing partner on that. So that's where you're seeing most of the reactions so far. But otherwise, we're actually seeing, again, mixed moves today. But that's perhaps the Micron story playing into it, given you had those Micron figures after hours, and they gave a very bullish forecast for the current quarter. What else we're tracking is the LG story. So we've got LG Energy, LG Chem in focus today. Both of these stocks are under pressure so far, but we did actually get some news out. Ford has cancelled a $6.5 billion battery agreement with LG Energy Solution, and that's after, as well, we saw the car maker earlier this week rolling back their EV ambitions. So LG Energy, LG Chem, these two tend to trade in tandem, of course, but yes, Ford notifying LG of that cancelled order on Wednesday. We have the market reaction this morning, but we'll have much more ahead on the Asia trade. This is Bloomberg. President Trump is set to address US TV viewers in just a few hours. That's as polls suggest voters are souring on his handling of the economy. Let's bring in Bloomberg senior editor John Hynes, who joins us from Washington this morning. And John, it's unusual to see Trump taking on a primetime address like this. Why exactly is he doing this, and exactly what are we expecting him to say?
You're right. It is fairly rare. As far as what he's going to say, it's always tricky to predict what a Donald Trump speech will contain. You can predict it'll be unpredictable, perhaps. But for the first time in a decade of, for the most part, dominating the political conversation in the United States, he risks being drowned out by voices of discontent, voices of voters. As Democrats found out the hard way last year, voters were very upset about prices and inflation. In the elections of this year, last month and this month, Republicans found out the hard way that voters are now very, very upset about prices and inflation. So what President Trump has to do is to reassure his supporters and those who may not have been exactly supporters but voted for him, that prosperity, or that the economy will turn around, will rebound in the coming year.
Yeah, just let's pick up on I guess, the discontent that we're seeing, because we're coming off a string of defeats in the governor, the mayoral, other elections, and smaller margins we're seeing as well. So it seems like voters are maybe being pulled away from supporting Republican policies. Just like, how bad is it actually getting in terms of discontent?
Well, it's the economy. There's healthcare, there's housing, prices have gone up, food, and they're not seeing much relief. And President Joe Biden found himself in much the same position during his administration. He could say that economic indicators are going the right way, but voters disagreed. And so far, that's what we're seeing. Now, the midterm elections are about a year away, and a lot can happen in that time. Now, President Trump may pivot onto foreign affairs and perhaps discuss accomplishments, including the agreement that led to at least for now, a cessation of violence and combat in the Gaza Strip, the bombing of Iraq, the Iran nuclear sites, and perhaps even closer to home, his campaign against Nicolas Maduro in Venezuela. This included strikes on boats and an enormous military buildup.
President Trump is really the figure of the Republican Party, and of course, when his name isn't on the ballot next fall, he's going to have to be able to convince voters in the policies and what he's done so far for the party. Is he going to be able to do that, and is that a direction that we really ever see him taking, focusing on the policies and the party as a whole rather than on him as the individual?
Well, he's promised to go full tilt as the midterms approach. He had the recent rally in Pennsylvania. That was his first in some time. He plans more, including he's going to be in South Carolina on Friday. But you're right, he won't be on the ballot, and presidents in their second terms have to face a constant struggle with avoiding being a lame duck. So President Trump says he's up to the task, and again, he and his Treasury Secretary Scott Bessent and others promised that the economy will take off in the new year because of the One Big Beautiful Bill, the campaign, the deregulation campaign, and as the massive investments in artificial intelligence begin to pay off. In other words, that good times are ahead, and that voters, he will no doubt list the accomplishments or what he sees as accomplishments over the past year and say that the payoff will begin in the new year.
John, thanks for joining us. That's our Bloomberg senior editor, John Harney, there as we await this President Trump primetime address coming at 9 p.m. That's Eastern Standard Time or Eastern Time in the US. So about an hour and a half from now, we'll have full coverage of that. But in the meantime, let's take a look at what's happening with Japanese assets, because we're 20 minutes into the trading session so far, and we're seeing equities that are dropping here. So, yes, lots of concerns around the tech theme in general, but also in Japan specifically, where we're counting down to that BOJ rate decision. And we've had that big focus on the Japanese financial sector, for instance, and the moves we've seen in that. But yes, the expectation here is we're going to see the BOJ raising rates to their highest level in 3 decades. The Japanese yen, you can see they're holding back above that 155 mark. Let's also take a look at the political side as well, because Japanese Prime Minister Sanae Takaichi says she'd like to meet with President Trump as early as possible. This is the simmering diplomatic dispute with China over comments about Taiwan continues. Let's bring in our Japan economy and government reporter Paul Jackson in Tokyo. Paul, let's get started with that possible meeting. When would it take place, and what's also the reception from President Trump on that so far too?
Well, obviously, nothing's been decided at this point. This is, posturing, perhaps aspirational, but the fact that she's made that comment suggests something could be in the works. So when would that be? Spring next year, perhaps. There's obviously plenty to talk about. I'm sure Takaichi would like a little bit more support, vocal support from senior American officials in this spat with China. That would be a little bit more reassuring. Takaichi and other officials have been repeatedly saying that they have full US backing, but it's been a little lacking in vocal support from those senior officials. Also, if you remember, in that trade deal, they signed off on this $550 billion investment fund. We have the first initial panel meeting on that underway in DC. So a first project in that fund will probably be announced at some point early in next year. I'd imagine it'd have to be a big ticket item, maybe something in the energy industry. But certainly plenty of reassurance probably sought from Japan, and it would be very constructive from Takaichi's point of view.
Yeah, reassurance, because we're continuing to see the fallout on tourism in particular for Japan after the comments that Takaichi made around Taiwan. So we've got more, I guess, data coming in on this front. So what's the latest?
Well, the latest is that the number of tourist visitors from China is still ticking up, but it's totally out of whack with the trend that we've been seeing. In the first 10 months of the year, we were seeing 40% gains in the number of visitors from the mainland, and they just edged up about 3% in November. So what does that tell you? It doesn't say everything's fine. It essentially says that we've got over 200,000 missing Chinese who would be here spending money, and they are an important point of an important part of that spending in tourism. Now, is this the kind of hit that would buckle the economy and force Takaichi to change her mind? No, it isn't. It isn't that kind of extent. But for smaller businesses, hotel operators, restaurant operators, especially in those parts of Japan where Chinese visitors tend to concentrate, this is indeed a blow.
Yeah, but quite exceptional, even with all these flight cancellations we've been reporting on. The market reaction we've seen in names like Shiseido, actually incrementally, the figures are still a little bit higher year on year. But that was our Japan economy and government editor, Paul Jackson, there in Tokyo. But let's also shift back, because we just had some reporting around OpenAI. Breaking news here, coming from the information, actually, but they're saying that OpenAI is looking at fundraising. The valuation for this company could be around $750 billion. Now, at $750 billion, you're talking a level that's 50% higher than OpenAI's last share sale in October. So it would be adding to an already very substantial cash stockpile that's needed to train and run its AI models. So yesterday, of course, we had reporting that Amazon was looking to invest $10 billion or more in the company. But what the information is saying is that OpenAI could be looking to raise tens of billions of dollars, possibly as much as $100 billion. So that's the reporting there, as I said, coming from the information. But OpenAI looking at fundraising with a valuation of around $750 billion. More ahead on the Asia trade. This is Bloomberg. Well, the top corporate stories we're tracking this morning. US prosecutors have charged the founder of bankrupt subprime auto lender, that's Tricolor, with conspiring to defraud investors, or lenders rather, and investors. The indictment accuses executives of using various schemes, including double pledging auto loan collateral and manipulating loan descriptions. Tricolor filed for bankruptcy in September. That's after shutting down over 60 locations across the US Southwest. E-commerce firm Pinduoduo is said to have fired a government relations team in Shanghai. That's after staff brawled with Chinese regulators during company checks earlier this month. Sources say the fight happened during investigations into reports of fraudulent deliveries on the platform. The incident could lead to more scrutiny of PDD from state regulators. Tencent has appointed Yao Shunyu as its chief AI scientist, entrusting the former OpenAI researcher with leading its artificial intelligence efforts. Yao will report directly to President Martin Lau, that's also the head of the company, and also head, rather, the company's AI infrastructure department. Tencent's move is the latest in a series of high-profile hires in the sector this year, most notably, of course, led by Meta. Let's take a look at how European futures are coming online this morning, because overnight in the session, again, it was very much a story of concerns around AI and the bubble fears, the Oracle move with Blue Owl hitting sentiment, because we actually saw them ceding some earlier gains they had off that. The FTSE 100 actually advanced in the end, nearly 1%, but we saw inflation slipping to its lowest level in 8 months. So it does really just tell us that interest rate cut could be in the cards with the BOE meeting on Thursday. We've got the benchmark, though, hitting around or hovering around close to a record. So investors are still looking at resilient global growth and also this prospect for Fed easing to extend into next year. The euro there, you can see, trading around 117 to the greenback. We saw the greenback, again, little changed overnight in the session. But more ahead. This is Bloomberg. You're watching the Asia trade. Well, we are half an hour into the session so far today, and you're seeing some losses here across the board. So it tracks what we had on Wall Street overnight, because we saw the S&P 500 breaking through a technical barrier, losing around 1.2%. But the big story intraday was Oracle and Blue Owl, because Blue Owl is pulling out of financing an infrastructure or a data center project that we see in the US. So let's take a look at how SoftBank's faring, because actually, if you look at all of the constituents in the MXAP this morning, 75% of them are moving in the red, and SoftBank has been one of the biggest laggards. I mean, it came online 6% to the downside, so you're sort of pairing those losses, but still off around 1.5%. You just saw as well SK Hynes there, but it is moving to the upside, and again, one of the more standouts in the session so far, and that is after we had Micron reporting its numbers in late trade and offering a very bullish forecast for the current quarter. So a company that's, again, at the centre of the AI build-out, but also one that's able to benefit from shortages that we see on the horizon around memory chips, and also with its components used for HBM. So that is the story there for SK Hynes. Let's also talk a look at what we're going to be watching in the session today around China, because we've seen lots of moves in the property space of late. But the latest on this front is that Bloomberg's being told by sources that China Vanke has asked some commercial banks to accept delayed interest payments. That's as it grapples with mounting liquidity pressure. We'll bring in our China correspondent Min Min Lo, who's in Hong Kong for us. So, Min Min, these debt talks, they're being expanded here. Of course, they fell a little bit flat, the latest one. So what more do we know right now?
Yeah, so we understand from sources that Vanke had held a meeting with representatives from banks and insurers yesterday, asking for a delay in the payment of interest, also asking for more time to come up with a new debt plan. Separately, it said in a filing it has secured extension of a guaranteed loan by 1 year that's provided by one of the banks. But all eyes are now going to be on that bondholder meeting that is taking place in a couple of hours from now to discuss a bond that was due on Monday earlier this week, but the company had failed to gain at least 90% support from bondholders to delay the payment of that bond by a year. So they are going to provide new proposals with some credit enhancements, offering to pay the interest by Monday, but they're asking for an extension of the grace period from 5 trading days to 30 days. So we'll see what happens later, but it's not just that bond. They have another bond as well due later in the month, December 28. They have a 3.7 billion yuan bond due as well, and the company also has put out, I think, 6 proposals now to delay payment for that bond as well.
So, okay, it seems like bondholders need to assess the different options. What are they and what happens next? This could end up being something that happens in the shorter term, or it could end up being very protracted.
Yeah, it could be very protracted because, as I mentioned, there are a couple of bonds that are due this year. But if you look ahead to June of next year, you can see on this list here there are about 30 billion yuan worth of bonds that are expiring. And on top of that, these are just the onshore bond. They also have offshore bonds worth about $1.3 billion as well. So right now, the most important one is the one that has already expired earlier this week. The grace period is until Monday. If they don't pay up by that time, or if they don't agree to a plan with bondholders to give them an extension, then bondholders could call default. And of course, that would kickstart a very long-drawn process. It could raise the risk of cross-default for other bonds as well. And some analysts are saying, it's probably better to call a default now and to speed up the process of recovery, just given the assessment that some of them have of the company, that at some point is probably not a question of if, but a question of when they will have to go through a large-scale holistic debt restructuring, just given the liquidity conditions now.
Yeah, and we were talking as well around the assets that would be left to be divided up. But what's the contagion risk that we see for broader property markets, given you've still had weaker data coming in?
Yeah, the weak data has been really disappointing. It just reaffirms this forecast from many analysts that the property crisis could extend for a couple of years. And I think if you talk about contagion in terms of people's confidence in home buying, in terms of banks borrowing terms, we already see the hit on that maybe a couple of years ago, back in 2021, when Evergrande collapsed. So this, some say, is perhaps a symptom rather than a catalyst of another contagion. But I think the key thing to watch is that this is a state-backed developer, and so far the property crisis has largely been contained to the private developers. So this is seen as a bellwether for how other state-owned developers could do. And if home buyers start to lose confidence in buying homes from state-owned developers as well, and if banks start to tighten their borrowing conditions, it's just going to cause the liquidity crunch to worsen even further in the industry.
Min Min, thanks for those insights. That's our China correspondent, Min Min Lo there. And let's take a look at how those concerns around the property sector, but broader economic malaise are certainly feeding into the equity picture, because it's a really interesting story we're seeing here. On the one hand, you've got this strength that you see in the Chinese currency, and then we've got talks that maybe we get that 7 handle. I mean, you're very close to it right now, and even below that, 6.9, for instance. On the other hand, you've certainly seen a sell-off in equities, even if it stabilised yesterday in the session. But let's get more on this now with our Asia equities reporter, Winnie Xu, who joins us this morning. So, Winnie, just talk to us exactly why are we seeing this divergence between stocks on the one hand, currency markets on the other?
Yeah, morning, Belle. It is a very interesting trend, like you pointed out, because so far this year, it has really been stocks and yuan moving along each other, strengthening together. But just in the past few sessions, that has really reversed, as you can see on this chart as well. And actually, we were talking about the correlation of the MSCI China and the yuan actually dropping to the lowest in more than a year. And two, they're really moving on different factors right now. Like you mentioned, yuan right now around some 14-month high, and that has been driven by the PBOC stronger fixing and the fact that the traders are actually focused more on how the government is less keen to have aggressive easing at this point, and actually want to allow further potential appreciation in the yuan to support the economy, to rebalance away from focusing so much on the exporters. On the other hand, when you talk about equities, it's a different story because of that weak economic print actually potentially going to hurt the profitability of companies and the growth of companies. So as a strategist put it, the currency is actually trading on the policy floor, while stocks are actually capped by a growth ceiling. So I think that's pretty much how the story is playing out right now.
What does it mean then in terms of the implications for investors? What the current trend we're seeing, if that's sustained, what's the implication?
Yeah, exactly. So, we've been writing and talking about how this year has been so transformative for the Chinese market, especially with all these different assets strengthening at the same time, and how Chinese market is ripping off that uninvestable tag, because a stronger yuan and a stronger stock market basically implies further capital inflows and the confidence in China as a whole. And now with one engine kind of slowing down, it seems like, traders are then a bit more hesitant to just pour more money into this overall market, and that it might actually have more downside when it comes to the capital inflows. And it also means that investors might be a bit more selective in terms of what they invest. Right now, we are seeing money then focusing a bit more on FX and rates instead of stocks. But when it comes to the stocks space, some traders are also saying that that might imply that there is further upside when it comes to the different sectors, specifically for insurance and financial stocks that would benefit from a stronger yuan, and also airlines that have more US dollar debts.
Winnie, to the points you were just making here around this divergence, we just showed a great chart that puts it into perspective what you were saying, that it really kicked off at mid-November, essentially. Do we expect that gap you can see there? It's the MSCI China in white, it's the dollar yuan in blue. Do you expect that to widen even further, or do you expect it to start to converge again? Because you can see they've essentially traded in tandem for a long time.
Yes, exactly. So far, when we asked about the sustainability, most investors actually expect that this widening gap to last for a bit longer, specifically a bit further lag for the equity space, just because we haven't seen too much of the signs of profit recovery or growth recovery. So until we see that coming back, we might still see this gap to widen further. However, in the longer term, we are expecting that the strength of both assets to continue further, just because a stronger yuan actually would help stabilize stabilize, would help anchoring the financial stability and also the capital flows. So that is still good for the stock market. And for now, expectations for both assets are actually quite positive into 2026. We're talking about the further yuan strengthening, and Goldman Sachs actually see the yuan right now undervalued by about 25%. And on the stock space, when we talk to big funds like Fidelity, like Man Group, they're still expecting stocks to also gain further momentum after this near-term correction on that strength when it comes to the AI space, and also more policy to deliver once we kick off that 5-year plan starting next March.
Yeah, Winnie, thanks very much for joining us. That was our Asia equities reporter, Winnie Xu, there as we await the opens in China, and actually futures looking a little bit mixed right now, but we'll have more ahead on the Asia trade. This is Bloomberg. Taking a look at one of the big movers in Sydney this morning. So you've got Woodside Energy here that's recovering or recouping some of its losses, but still trading down 1.9%. So the story this morning, and a real surprise for a lot of investors as well, is that BP has announced and appointed Meg O'Neill as its new CEO. So she's going to be stepping away from her position at Woodside Energy moving forward. Lots of questions around what that means for the Australian energy producer. But let's bring in our Australian energy reporter, rather. That's Kira Wright joining us. So Kira, yeah, let's talk about the implications for Woodside. I mean, Meg O'Neill's been in this position since 2021, and now she's stepping down. So what does that mean exactly, do you think?
I think it's going to have huge repercussions for Woodside. And I mean, clearly the new direction here will depend on who they ultimately appoint. I think that there's a lot of confusion from shareholders at the moment, and people are just really unsure at what it's going to look like for the company moving forward. I think that Meg has brought a lot of consistency in terms of her strategy. We've seen her really double down on fossil fuel efforts, whereas some of their other competitors, like BP, have, I guess, tried to redirect some of their investment into some green strategies. Unfortunately, a lot of those actually haven't really panned out. So it'll be interesting to see whether, I guess, Woodside continues to follow down that path and continues to, I guess, double down on their LNG and their oil and gas.
It still is, I guess, has several projects that are ongoing. What are the biggest challenges for whoever takes this new leadership position or is appointed to it, do you think?
Yeah, that's correct. I mean, earlier this year, the government, the Australian government, that is, they gave Woodside permission to continue operating Northwest Shelf, which is a big gas exploration export project, to 2070, so decades and decades still. That's obviously going to be, I think, an ongoing point of contention. It's potentially a really big moneymaker, but it's also very controversial. So, as you can imagine, there's been quite a bit of criticism that both from the government but also of Woodside as a company, that they are considering to continue to operate a big fossil fuel project for so long. It's kind of, I guess, at odds with Australia's goals to try and reach net zero. So that's definitely going to be on top of mind.
As you said, BP is one of the companies out there that's pursued more of those green projects, and that's not the tack that Meg O'Neill's taken at Woodside. As she goes into this new position, what do you think some of her priorities might be for the business?
It's an interesting question. I think it's probably too early to conclusively say, but I will say that from the discussions that I've had with analysts and shareholders this morning, they are expecting that Meg O'Neill will probably bring some of those strategies over to BP. So we might see that the company redoubles down on its efforts, I suppose, to focus more on the LNG, the gas, the oil side of things, and move away from I guess, some of those green solutions that hadn't quite panned out for them.
Yeah, but I guess investors are disappointed Meg O'Neill departing Woodside, because she's seen that stock still under pressure this morning. That was great. Kira Wright there, our Australian energy reporter, joining us. And let's take a look at some of the movers so far in the session, because we're 45 minutes into trade so far, and one of the biggest actually has been related to that energy theme. But early this week, we saw Ford really walking back some of its commitments and its plans around EVs. And so they've actually scrapped now this $6.5 billion EV battery contract with LG Energy. And so that is certainly having a bearing on both LG Energy, but LG Chem that often moves in lockstep and is a big supplier into LG Energy as well. So we got the notification from Ford of the cancelled order on Wednesday. The South Korean company that is making a regulatory filing in Seoul. So that amount actually of $6.5 billion is equivalent to more than a third of LG's total revenue for last year. So clearly a loss for the business. Taking a look as well at what's happening with tech stocks today, because again, there's two different themes, but it does seem like investors, some investors at least, SK Hynix, for instance, really liking these Micron figures we got in late trade, but a bullish forecast for the current fiscal quarter. So they're saying revenue could come in at up to $19.1 billion for the period. That's multi-billion dollars ahead of what analysts had been anticipating. The other story, though, and why you're seeing some downside pressure on names like SoftBank today comes back to OpenAI, because we do actually see Blue Owl, rather, one of its financing partners, pulling out of an energy project in Michigan. So that's a data center build out, very much tied into Project Stargate, and SoftBank being the key financing partner on that. Let's take a look, though. We just had a breaking news crossing the terminal this morning. So the Wall Street Journal is now reporting that Elliott Management has built over a $1 billion stake in the company. Now, this would make Elliott amongst the largest investors in the business. That's according to what the Wall Street Journal is reporting. Lululemon, we actually have seen some changes there at the top, because we had the CEO stepping down from his position recently. There has been real pressure on him, and really a lot of pressure on the company as a whole to have a strategic reset, because we have seen lots of weakness in the company. They are now searching for a replacement CEO as well, but what we have is Elliott building a $1 billion stake in Lululemon, the company. We'll have more ahead. This is Bloomberg. Well, a 40% slump in shares of Mart from their peak is raising questions over the company's long-term prospects. That's as fears rise that Labubu mania is over. Let's get more with our managing editor for Asia Equities, Lian Ting, who joins us from Singapore this morning. So, Lian Ting, I think there's so many questions here. Labubu mania, are we past the peak? Is there more to come? Is this a long-term business for the company? What exactly are we hearing so far?
Yeah, all these are very much the questions that investors are asking right now. The sheer slump really was triggered by the kind of worries about the slowdown in its Labubu sales. And if you look at Black Friday sales in the US, it was a big disappointment. The numbers were good, don't get me wrong. It was more than 400% growth in the current quarter, but it's considered a significant slowdown because the previous quarter we saw double that speed. And the market is really punishing right now on that stock. As you said, it was a 40% drop from August peak, and short interest already tripled from November levels. And if you look at the valuation, it's now at quite a depressed level. Forward PE is at 14 times from 45 times that we saw in June.
What is exceptional, though, is even as you have this concern and this slump, you're still up around 120% on the stock for the year. And I'm just taking a look, for instance, at the revenue growth for the North American market in the current quarter to December 6. But essentially, it's slowed to still 424%. I mean, are we sort of overstating as well this concern of weakness, given it has been a real run-up and a real demand?
Yeah, I think overall people are really focused on the short-term numbers for this company, because the company's market buzz is generated from the buzz about its Labubu dolls. And if you look at the Google trend, the search for Labubu or Mart has really cooled, I think, significantly from August. So that is correlated to the stock market performance. But, you know, the company is actually doing things to sustain that kind of buzz. It opened a theme park in Beijing about a year ago. And reportedly, it has struck a movie deal with Sony Pictures to produce a Labubu movie. So these things have not quite been realized, and people are still worried that, are we really going to see a bit of a Beanie Babies bust in the 1990s? But overall, I think with this kind of depressed valuation, the upside could still be there. On average, analysts are expecting about 84%, I should say, upside in the next 12 months.
How important is the resale market and what we see there in terms of as a sentiment indicator, essentially?
Yeah, it's just a very key data point, along with the North America sales. The retail sales market, again, not very good, while it still dominates the retail market for collectible dolls. The price point has dropped. You used to be able to sell, double or triple the price, but now that price has really dropped, and people are taking it as the fact that maybe, fandom is cooling a little bit, and it's a very emotional type of investment or purchase by consumers, and this is considered a craze right now. And we all know about craze. The craze can easily shift to the next craze. That is really the question weighing on the investor's mind right now.
Lian Ting, too, there. Thanks very much for joining us, talking about all things Pop Mart and can we see, I guess, more sustained upside, or are we going to see, again, further correction into next year? Let's also take a look at one of the big stories that's just dropped in the last few minutes here, but we've just had reporting from the Wall Street Journal, actually, that the activist investor Elliott Investment Management has built a stake of over $1 billion in Lululemon, and also that it's bringing a potential CEO candidate to help turn around what has really been a bit of a struggle for the athletic apparel retailer. So they've apparently, Elliott, been working closely with a veteran retail executive, Jane Nielsen, who they see as someone who could be a potential CEO candidate. Of course, we saw the CEO exiting back at the end of last week, but Calvin McDonald saying that he would be stepping down from the top post at the end of January, and also, analysts saying that this new leadership shift is seen as overdue as well. So Lululemon as a company, it's really been under pressure to reverse missteps from quality issues. There's concerns that maybe it's, quote, losing its cool as well, and shares have collapsed, essentially. We're down more than 60% from the peak. So the company trading at multiples below other retailers. So you've got that reporting from the Wall Street Journal, but certainly you have seen a reaction in late trade because the stock is actually up 4%. And again, that just points to what's ahead for the company and these leadership changes. But let's take a look at futures as we go into a break here, because we do see equities looking like we're going to, again, have further downward pressure. We saw that in the US session extending into Asia today. More ahead. This is Bloomberg.